Hi, good afternoon, traders. It's Kobe T here. Today is Sunday, the 18th of December. This is our Sunday service. We'll begin by reviewing the three pairs we spoke about last week, see how well they did, and then we'll go into what we're looking at for the upcoming week. So the first is the euro dollar chart, which we drew. We were looking for longs from this zone, provided we had our right entry, which we got, and we have currently hit our TM zone, trade management zone, which is the point at which we take some profit out of the market and we do not lose any money on this trade. So currently we should all have 1%. This was a one-to-one trade to the TM zone. If we hit targets, we'll be on 3%. So at this point, we're safe. There is no need to do anything other than sit back and wait, see if the market hits target or if it reverses and hits your stop, at which point you will make 1% profit on this trade. The second we look at is dollar CAD. The dollar CAD trade is currently up to a 3-to-1 target on the TM zone. Based on market structure, we had a 3-to-1. So this entry to this line is 3-to-1. So we're currently at a 3-to-1. We've just got past that, and we're waiting for the markets to hit target. So once again, at this point, there's no way we can lose money in this trade. We just need to sit back and wait and see what happens. One thing when you're trading is to know what other people are doing, what other people are thinking, which is why we always put this trade management zone in here to protect our profits and minimize our losses. Is because if I'm to look at this pattern, we know that other traders will be looking at a potential head and shoulders pattern, which would mean they're looking at the market going in the downward direction following this little move up here. So it'll come up and then they'll be looking for a move to the downside following this little move. So we've protected our profits. We've got a 3-to-1 on at the moment, and we just sit back and wait for the market to give us what would be a potential 6-to-1 target. The final one we mentioned last week was Aussie Yen. Now Aussie Yen has literally just got into the trigger zone. So the trade would have potentially opened on Friday, depending on which entry technique you used, or it could open on Tuesday if you've got the more conservative entries. And we'll be expecting this market to go down to the zone to hit our TM. And if it hits a TM with our advanced type entry techniques, we're looking at a 5-to-1 TM zone or a potential 10-to-1 before it hits target. So that won't be a bad week at all. So in all, last week we're looking at currently 4% profits and one floating trade, which at worst could be a -1% loss. So we pretty much secured 3% for the week last week. Moving on to this week quickly. The three pairs we're looking at is Euro, Swiss franc, and we've got this zone highlighted here, which is going to be our entry zone. The market is currently here as we speak, and we'll be waiting for a push to the upside. So provided we get an entry signal anytime now, we will take this trade, and we'll be looking to take it up to targets. But as we know, we always go to our TM zone first, manage our trades before it gets to the target. So that's Euro Swiss for the long. The second pair is Euro Pound, and Euro Pound has a pretty good structure, quite a clean structure, which we like. We envisage the market stalling around this point before making a move to the upside. So we'll be awaiting a trade to that zone. Provided we get an entry in and around this zone, we will take the trade to hit our TM zone, and once it goes there, we will be looking to take it to the target. And as we can see, there's a potential head and shoulders reversal at our target zone as well. And the final pair is dollar yen. Now dollar yen, this is more of an advanced entry using waves and wave counts. So we've got a potential 5 wave to the upside, which is our red 1, 2, 3, 4, 5. We then also have our 5 wave of the completion of our wave 3, which is near enough complete based on our technical analysis. So we would be expecting a small retracement before a move to the upside to complete the move. So those advanced traders can take the retracement, and they can also take the impulse back to the upside. Bearing in mind how we manage our trades is essential when looking at these type of setups, because yes, we would be risking 1%, but we could potentially make a whole lot more if this market is to just plummet. So we always let the market show us its hand before we react. Off the back of that, there won't be any Sunday service next week because I think it's Christmas. But yeah, wishing you guys a happy holidays, happy trading, and we will see you guys in the new year. Thanks.